friends, welcome after a long time. I was little tied up with my project works, so I couldn't make a video from long time. Now I have decided I will make a video every weekend for the week altogether on a 5 minutes time frame for intraday. For say 5 days, I will make a video on Saturday or Sunday so that you will get to know what happens for the full week. So let us start for say 9th December Monday. I'm trying to clear my backlog, and from next week, surely I will post a regular weekly videos on a weekend. So let us see what happened on 6th. 6th was sideways day. This was high and this is the low. So PDH and PDL we marked. And today, like on 9th December, it was a very narrow CPR. So usually it is trending or zigzag day. This is all probability. So what happened here? The market opened exactly at PDL, and then it took support and closed here. Now, since um, this is a support, PD L was a support, but you see where the market closed. This is closed exactly at the resistance of 20 EMA and CPR, narrow CPR. So there is no trade here. Now the second candle broke the first candle high. In this case, it's not a breakout because narrow CPR is not a strong support, strong resistance. You cannot treat that as a CPR breakout because first of all it is back to back, it's a parabolic, so there is no trade here, no long trade here, and moreover there is no risk reward, proper risk reward. The third candle reversed. Actually, in this case you can take a trade here, like uh, this top, the first candle top is if you consider this as a first candle range, the second candle broke it and third candle reversed. So this is called a false breakout. Like a second candle broke the CPR 20 MA and first candle high, and then third candle reversed. In this case, you should go short, and this is a short position. Your entry will be here when the candle is closed, and the safer stop loss will be above the CPR. This is with good risk reward, and if even if your stop loss hits, it will be not a big stop loss. Above the candle will be two big stop loss. So above the CPR and above the first candle high, because this was your level from which the second candle given breakout and third candle as reverse. Now where is the 1:2 risk reward? Your exit will be here. This is your target. Yes, so somewhere here is your target. So this is 1:2 risk reward, so you should get out here. In fact, you can get out on the first candle low, or the uh, pivot, this green pivot, or this 1:2 risk reward, because generally market has a tendency to go to the day's low and take the support again. So this is this is first trade has hit our target. The second trade, people may say that this candle, this is 955 candle, like because this is from exactly from here the market went up. Now again it showed a green candle here. You can go long here, keep your stop loss below this pivot, but you see your stop loss hits. And generally this kind of like W pattern, M pattern, or the green candle reversal pattern, this is high probability when it is a wide CPR, because market follows the range. Now today it wasn't a wide CPR, so this broke your stop loss hits here. So even if you see, you take this trade and here you achieved your target, the second trade it fails, still you will be in profit because your risk reward is 1:2. So one trade works, one trade doesn't work, still you will be in profit. That's the beauty of following risk reward. So that's it. Then after that, I don't see any trade here. Although this candle, this is 1045 candle, looks like it has given a false breakout. Uh, I won't suggest to go long because, as I told you, today is a narrow CPR. Narrow CPR is zigzag day or trending day, so there is less likely it will be reversal, and there is a big wicks on top. So there is a rejection. Although this worked, but these are few setups I'm just trying to say. Here also you see this candle, 1240 candle tried to take a support. Now there was one more trade. If market reached this top from where it fell down, if market goes there again and reverses, then but market could not reach this point, market reversed from here only. So Nifty, if it had touched this point, then there was an entry that is called like M pattern or supply zone reversal pattern. So we should wait till market reaches this point. Okay, so that's it guys. There I see no other trade on this day. Yes, there is no W pattern because first candle is green candle. First candle, when it is green candle, there can be only M pattern, no W pattern. For W pattern we need first candle to be red candle. So that's it. I hope this is uh, understood. Now let's follow, because I'm doing it for full week, so let's follow the next day. Next day is say 10th. So again we will mark the high and low. This was the high, and the high can be treated with importance because this is a supply zone. Supply zone because market failed suddenly from here, and then market could not reach to that point. So that's a supply zone we can trade. This is PDH and PDL. There is no other important level I see. So on say 10th December, Tuesday, market opened between these two level. The first candle was indecisive candle because although it is a red candle, there is wicks on top and bottom, and it could not break the CPR properly. So there is no trade on the first candle, and the low of the first candle is broken by this candle, but there is no good risk reward because if you enter short on this candle, you keep your stop loss here, there is immediately a PDL. PDL here is a strong support because you see it's reversed from this point. So there is no trade on this candle. And this candle, the green candle, 930 candle, this gave a false breakout from here, this line. Okay, this this gave a breakout, 10-5 candle, sorry, 925 candle gave a breakout, and then 930 candle gave a false breakout, but there is no trade here because it is closing inside the CPR. Whenever the candle is inside the CPR, there is no trade. This is a powerful rule. Now on the top also, if you see, this candle has broken the CPR and the top of this candle. Uh, you can go long here, but there's a low probability. Why, I'll tell you. Like, just mark this level. Okay, this level is marked with this. Okay, now although this candle has broken this, you see how, like, it's not even 25% of the candle which is broken this. I have been telling in my previous videos that the high probability is when candle breaks it exactly half, like the breakout should fall, the candle should close somewhere here, then it is properly broken. Now it is hardly, like, it's not convincing breakout, it's a small portion body up. So this kind of breakouts are low probability, please understand this. Then market went up and then fell down, then there is no trade because this is uh, this is not a proper red candle to go for a red candle retracement trade, so there was no trade here. Now in such cases, then unless the low or top is broken, there is no trade. So no trade on any of these candles unless this is not touched, or here we can check what is the status. Only on the important levels you should trade. Now this was a day's low, how market behaved here. It tried to break, but again it was not a convincing breakout, and there is immediate this one, so there is no trade, and there is no reversal also. There is no green candle here, so there is nothing, no trade here. Now here, okay, this candle has broken the PDL, but you see this, there is a wicks, so this is not also a breakout. No trade, no trade on this candle. And then okay, like you would surprise why this green band is there. So let's go back. This is how market behaves, you know. Look, that day I had marked this because market went up, fell down, and from this point it reversed. So this becomes your demand zone, buyers zone. There are strong buyers there, and see how beautifully market respects that. Market fell down, this candle did not touch, but this candle, sorry, this candle, this is 150 candle, it has given a proper reversal, so you can go long here. This is called demand zone reversal pattern. Or suppose this is demand zone, now this has become a proper green candle and it is reversing, so you should go long here. Stop loss below this zone or below the pivot, and then twice the stop loss is your target. So in this case also target achieved. Sorry. So go long, stop loss below the demand zone, and 1 is to 2 is your target. So this is your target, this is risk reward ratio 2. So you should get out here, or this PDL. Important levels you should get out or get in. You should exit timely, although the market will go up after your exit and all. You should not even think about it. Just take your 1 is to 2 risk reward, follow it, and get out of the trade. So that's it. We are done with this one now. So let us go for next day, which was Wednesday. PDL, and this is PDH. Okay. Now what happened on this day is, okay, again the market opened between PDH and PDL. Somewhere here the CPR is like narrow, so most probably it is trending day or zigzag day. Now first candle is red candle, but it's not a proper red candle. Took the support on the CPR. There is a wicks here, so there's no trade on the first candle. Uh, Whenever there is the market opens between this PDH and PDL, mostly there won't be a trade on the first candle unless it takes support or does some thing with the CPR. So always remember this point. Now bottom, this is the low of the first candle. So okay, this is not broken here. Again, you cannot take the trade. Then the top of the first candle is also not broken. This is not a breakout because first of all this, there is a wicks on top, and second this wicks hardly anything is broken, so there is no breakout here, no breakout. And I told you, like, this is the selling point. Okay, this is the you call it supply zone. So supply zone means we have to check how the market behaves at this point. And now you see uh, this candle, the candle 1050 candle has given an exact reversal. This is the red candle and from the supply zone, so you should go short here. You go short, keep your stop loss above the PDH or above this pivot. And I have told you that whenever there is a pivot near the PDH or below your stop loss, you should go above the, because market has a tendency to touch all your supports and resistance. So what we have to do in this case, the short position, you should enter here, but the stop loss will be exactly above your pivot, and it's not like exact above. Sometimes it will take your stop loss and exactly from there it will reverse. So in that cases you should not be bogged down. You just have to be happy and gracefully accept the stop loss, stating like, you can vouch that your views were right, but it was like unfortunate day, that's it. The assessment analysis was correct. Now in this case, always whenever we keep the stop loss, you just keep few points away, because market doesn't like perfection, like perfectly from there only it will enter. So few points away, and even if your stop loss gets hit here, okay, no problem, get out of the trade. It happens, some days are like this. So with 1:2 risk reward, what is your, okay, 2, this is 2 exactly on the first candle low or the CPR. So in this case, I don't think the target is reached, but by the end of the day, you would have achieved this. So you were profitable. If your trade, the stop loss doesn't hit here, you're still making some profit on this day. So there was no other trade. Then let's go the next. This is 12th December. 12th December, for that, this is PDL and the PDH is here. Okay. Now today is very, very narrow CPR. So again, narrow CPR means a trending day or a zigzag day. Now again, market opened between the PDH and PDL. So in this case, the only difference is it it broke the CPR. Now in such cases, still you cannot go long, because you can go long, but this is a low probability. Why? Because the CPR is very narrow, and very narrow CPR has got no significance. You cannot trade this as a CPR. So even if the CPR is broken, it is not called as CPR breakout trade. Okay, the CPR should be narrow, average, or wide CPR to consider it as a CPR. Very narrow CPR is like you can neglect the CPR. It doesn't act as a support or resistance. So there is no trade on the first candle. Then this candle has broken the top, but it's not a breakout because it's a small wicks and it's not a proper breakout from that range. And there is immediate PDH also, so no trade here. Then it reversed. Yeah. From here it reversed, but this exactly closed on the 20 EMA, so there was no trade. Now where is the trade? Unless the low is broken, the day's low is broken properly. Yes, this is broken with this candle, and moreover it has reversed. It has reversed, so you can go short here. And in this one, you will say, now again the small body is closed, it's not even 20%. So in this, at this point you can go short, because you see this is a consolidation here and this is a power candle. So the short trade still works because it is having a resistance with CPR 20 MA, and after consolidation it is breaking the first candle low. But this is again a low probability with our setup, because this is a small, only the small body is breaking the uh, low of the first candle. So no trade, no trade. Then 20 EMA trade will not work here because it's not a trending day. For 20 EMA trade, it has to be from the first candle, it should be in the one direction. Then your 20 EMA trade will work. So there is no 20 EMA trade. And here, okay, yeah, this is like a demand zone. From this point market went up and then market never came back to that point, so this can be treated as demand zone. So this candle has broken that demand, so your trade is here. Where is your trade? The short position here. You should go short above the candle or above this point. This is your stop loss above the PDL and above the pivot. and 1 is to 2 is here. So 1 is to 2, yes. So this is your target and the target achieved. Yes. Yes. So this is how you must trade, guys, with discipline, with proper risk reward and logic. Let us go on the next day. Now on 12th December, your PDL is this and PDH is this. Look, if you follow like this, the logic and the proper setup to wait with patience and all, you don't have to check anything else. Don't check the option chain, data analysis, what is happening in the market, bullish, bearish trend, news, any events. Only on the events day, you should be careful, you should not trade. But other than that, like, market, the candle pattern will tell you everything. You don't have to watch anything, you don't have to get confused. Now let's see on this day. This is 13 December, Friday. So Friday, what happened? The CPR was average to white CPR. So in this case, market can do anything, like, because it's not average also, it's not wide also. So in such cases, uh, all the patterns can work. Now let us extend this also. This was your strong support. So yeah, market went up from this to this point, and then so we extend this point. Okay. Now market, now such are the days where you should not miss the opportunity. Like you have seen other 4 days, the market opened within the range of previous day. Now this was the first day after few days wherein market opened outside the previous day range. Like market low was here yesterday and this opened with a proper bearish candle. There is no doubt you should go short on this candle, first candle, because it is like a if it is opposite above the PDH and green candle, then it's a open drive pattern. And this one also you can treat open drive but negative. So what you can do, you just go short here on the first candle low, keep your stop loss above the candle or above the PDH, above the PDL, sorry, because it has again broken the strong support as well. So there is a trade on the first candle and 1 is to 2 risk reward. So you should get out somewhere here. Yes, your target is here and you're out. That's it. Now what will happen next trade? When the market starts falling from here, you are out on this point. Again the market is going in the same direction. You should not worry about it. Your first trade hits, you are out, finish. Now second trade will be when? Now since the first candle top is not broken and it is unidirectional, then you can wait for, if you want to go in the same direction, you have to wait for the 20 EMA retracement. 20 EMA retracement, it will go to 20 EMA, again retrace, and then you can go short. Okay, but you have to observe what market is doing at the 20 EMA. 20 EMA, only two possibilities are there. Either it will take it as a resistance and give you indication that it will fall again, or it will break the 20 EMA. So what has happened here? It is not red candle, this is not red candle, this is a red candle, but still there is a wicks on the low side and it's not giving you a proper 20 EMA indication. Here it has given this candle. Okay, this candle has given you 20 EMA retracement trade. So but it's a pin bar, like, pin bar means, please understand one thing, although there is long wicks on top, this pin bar, this small, what I can say is, uh, there's no body at all. It's a hammer, the up reverse hammer. Now that indicates that this level is very strong support, it is not letting it go down. But suppose if you don't understand, you still go short here, no problem, you go short, keep your stop loss above this pivot, and then for twice the stop loss. Now in this candle is reversed, this is a proper breakout from this 2 weeks, and from the, it will take your stop loss if you go short, And even if you follow all the risk rewards, this is a low probability. Should not go long because there's no red body here at all. On such candles, it is not advisable to go shorts for 20 MA. Now, this candle you can go as a false breakout. Just take a trade as long trade, top here, your stop loss below candle, and 1:2 risk reward. So here you should be out. So two trades worked, and that's it. You should wind up. No more trades. You should go out of it. But one thing you have to mark, this zone. This is a strong support now. So how will you mark this? Just put rectangular shape. So this zone, whenever market comes to this point in future, you should observe how market behaves. Either it takes support or it breaks this level. This level is very important now. Now, okay, this candle has broken the top of this also. First candle high. So this is also entry, but with the rule, there is avoid entries on the B candle. If you take an entry here, where you will keep your stop loss? Below this point will be a very small stop loss, and even if you keep below this, there is a CPR on the way. So whenever CPR on the way of your target, avoid that trade. So low probability trade. Although it worked, but low probability. Now it went up, then again came down, and from this point, so there's no more trade on this. Now I think we are done for this week. The next week I will post from Monday 16 in another video. Thank you guys. Please let me know your questions. I will love to answer them. Thank you. Bye bye.